All right, welcome to The Explainer. Today, we're diving straight into a completely jaw-dropping financial paradox that just surfaced in SpaceX's massive new S-1 filing. Look, we're looking at a document here that basically changes everything we thought we knew about the modern space race. It turns out it's not just about space anymore. It's actually about the future of computing itself. So we're going to unpack the numbers, the hidden deals, and the colossal strategy buried deep inside this historic financial disclosure. Let's get into it. Right off the bat, we need to talk about the sheer scale of what we're dealing with here, because it is entirely unprecedented. SpaceX is targeting the largest initial public offering in human history on June 12th, seeking a mind-boggling $2 trillion valuation. To put that into perspective for a second, that completely dwarfs the previous record holder, the massive oil giant Saudi Aramco, which raised about $25 billion back in 2019. We are looking at a literal market-shifting event, demanding a valuation nearly 3 times larger than that historical peak.
But here is the massive contradiction we really need to untangle today. How on earth does a company commanding a $2 trillion valuation lose nearly $5 billion in a single year? I mean, when headlines flash that a company lost $5 billion, panic usually sets in, right? It sounds like a company that's wildly overvalued and just burning cash without a plan. But to truly understand this specific S-1 filing, we have to look way deeper than just that top-line loss. Well, to solve this paradox, we have to look past the rockets for a minute and understand how this company is quietly positioning itself as the critical picks and shovels infrastructure of the AI boom. Think about the historical gold rush. The people who actually struck it rich weren't usually the ones out there digging for gold. They were the ones selling the picks, the shovels, and the blue jeans. SpaceX is making a monumental bet here to become the ultimate picks and shovels provider for the modern artificial intelligence gold rush. And the secret driving this whole thing? It's a hidden deal buried in the filing. Get this. They struck an agreement with top-tier AI competitor Anthropic, the makers of the Claude AI assistant. Anthropic is paying SpaceX $1.25 billion every single month through May 2029 for computing power. Let that sink in. That equals roughly $15 billion a year from one single customer, flowing directly into what most people just assume is a rocket company.
Section 1. 3 companies in one. So, to understand how they even secured that Anthropic deal in the first place, we have to look at a pretty radical transformation. Following a February 2026 all-stock acquisition of xAI, SpaceX fundamentally mutated into a 3-headed corporate hydra operating 500,000 GPUs. When you actually break down their 2025 total revenue of $18 billion, a shocking picture emerges. The global internet segment, not space launches, is the actual engine driving the company right now. Connectivity, which represents the Starlink satellite internet business, accounts for $11 billion. That is a massive 61% of every single revenue dollar SpaceX generates. Launching rockets brought in $5 billion, and the newly acquired AI segment brought in $3 billion.
Let's break these pieces down a bit more. The space segment did bring in $5 billion in revenue, but it actually lost over $600 million on an operating basis. Why? Well, primarily because they poured $3 billion into research and development for their next-generation Starship. The Falcon 9 rockets make money, absolutely, but SpaceX is taking those profits and immediately plowing them back into Starship, the massive vehicle designed to eventually reach Mars, which currently doesn't earn a dime.
So the obvious question is, how are they funding these massive losses? The answer is Starlink. Their connectivity cash cow is pulling in $11 billion with software-level margins of, wait for it, 63%, generating over $7 billion in adjusted EBITDA profit on an $11 billion hardware business is absolutely unheard of. With over 10 million subscribers across 164 countries and 10,000 satellites in orbit, this segment is just an absolute cash-printing machine, and it's growing at 50% a year. And frankly, this explains exactly where that terrifying $5 billion overall company loss came from. It's the newly acquired AI segment bleeding $6.4 billion in operations. The second the xAI acquisition closed, all of those massive artificial intelligence data center expenses landed squarely on SpaceX's books. But remember that Anthropic deal we discussed a minute ago? That same AI segment bleeding billions is exactly where Anthropic will be pouring $15 billion a year, which is going to rapidly offset these losses. Moving on to Section 2, the AWS playbook, funding the moonshot. Financial analysts actually call this the cash cow funding the moonshot model. You basically take a dominant, high-margin, cash-printing core business and you use it to fund a giant, unproven, incredibly expensive bet on the future. Just like Amazon used retail to fund cloud computing and build AWS, SpaceX is using Starlink's massive cash flow to build their AI infrastructure. Starlink throws off billions in cash. That cash feeds the colossal research and development for Starship and the massive upfront costs of the XAI data centers. Then, step 3 kicks in. Enterprise deals like that massive Anthropic contract come online, turning that initial heavy infrastructure investment into a highly profitable enterprise over time. It's a brilliant playbook. And it's not just Anthropic either. The filing reveals they are rapidly expanding these AI infrastructure partnerships. Back in April 2026, they secured a computing deal with AnySphere, the company behind the widely popular AI coding tool Cursor. But the really explosive detail here is that SpaceX secured an option to acquire Cursor outright at implied valuation of $60 billion. That is a staggering number. It proves that Anthropic isn't just a one-off. SpaceX is systematically locking in the next generation of AI developers to run entirely on their compute infrastructure.
Section 3. Orbital data centers.
Now, everything we just talked about, that's happening right now on the ground in terrestrial facilities like Colossus 1 and 2. But the true moonshot detailed in the S1 filing takes this AI compute infrastructure directly into space by 2028. They actually plan to deploy a constellation of satellites that essentially function as a giant interconnected data center in orbit. You might be wondering, why on Earth put computers in space? Well, the filing reveals these satellites will solve Earth's two biggest data center bottlenecks, grid power shortages and the immense difficulty of cooling overheating chips. Down here on Earth, the power grid literally cannot keep up with AI demand. But in a sun-synchronous orbit, solar panels constantly face the sun, providing endless free energy. Furthermore, the infinite cold vacuum of space naturally solves the massive heating issues that constantly bottleneck terrestrial data centers. It's wild, but it makes total sense.
Section 4. The S1 risk factors.
Of course, an IPO of this massive magnitude doesn't come without some extreme caveats. Whenever a company prepares to go public, they're legally required to neutrally outline every potential threat to their business model, just so investors know exactly what they're getting into. So let's look at the most critical risks self-reported here. First up is the staggering cash burn rate. The company tore through $9 billion in a single quarter, dropping from $24 billion in cash at the end of 2025 to just $15 billion by March 2026. Building unprecedented space and AI infrastructure simultaneously requires immense capital. Though, as the filing clearly suggests, the massive Anthropic contract and those expanding infrastructure partnerships we mentioned are specifically designed to reverse this extreme burn rate going forward. Furthermore, the filing neutrally details a total dependency on Elon Musk, acknowledging his time is heavily split across multiple global enterprises. Crucially for governance, the document outlines a dual-class share structure, where Musk will retain roughly 85% voting control. Because of this overwhelming voting majority, SpaceX will register as a controlled company, which means it's exempt from certain independent board requirements that are standard for public companies. Why does this matter to you as a potential investor? Well, it means if you buy a Class A share, you're buying the financial upside, sure, but you have zero say in the driver's seat. You are entirely along for the ride.
So, as this completely unprecedented mix of rockets, satellite internet, and AI infrastructure gets ready to hit the NASDAQ as the largest IPO in history, it all boils down to one ultimate, almost psychological question for investors. Do you believe the thesis? Do you actually believe that a company can successfully use low Earth internet to fund interplanetary rockets, while simultaneously becoming the backbone data center for the entire artificial intelligence revolution? It's a fascinating proposition, and it's about to be tested on the open market. Thanks for joining me on this explainer to unpack this monumental filing. See you next time.